slide, I am going to discuss the common question which so many times has been asked in AFW regarding HRA and home loan when you are in same city. Many of you are asking, I am living in Chennai in my own house. Now I am moving to rented house. I am claiming HRA. Can I claim home loan also? Yes, it is possible. This is your office location. This is your rented house location, and this is your own house within the same city. Within the same city, you are owning a house. You were residing, or you are not at all residing in it now, and you want to claim home loan benefit on this, income tax benefit on home loan, as well as now you are residing on rented property deed, and you are paying rent, and you want to claim HRA. Yes, it is possible as per income tax rules. Home loan benefit is available within the same city for a self-occupied property if it is away from your office and you are living nearby the vicinity of your office. If you are claiming rental income from your own house, if it is on rent and you are receiving any rental income, then this A can be here itself also. It is allowed. And at that time, you can claim full interest payout adjustment from taxable income. Is this HRA thing clear? Any cross question? No?
Is there any?
Yeah.
Can you just repeat the concept?
You are living in Chennai. You purchased a house, but it is far away than your office place. So you are living at place B, which is nearer to your office. Now your question is, I am having a house in Chennai itself, but I am living on rent at place B. A is your own house, you purchased through home loan. Can I claim both benefits, HRA for B and home loan interest for A? Is it possible? I am saying yes, it is possible. In the same city. If your rented place is close to your office and A is far away. If you are putting your own house on rent and now this A is even here also, even then your HRA and home loan benefit both are possible. If you are claiming self-occupied, then A should be away from your office and this should be the rented. Anything else? Yeah.
What is the distance, like 40 kilometers or something?
It is
nothing.
Not distance wise. Not distance wise. Anything. If say it is 2 kilometers, it is 5 kilometers, even it is allowed, because due to your job, due to your office place, you want to live close. There is no fixed measurement of distance, 10 kilometers or 50 kilometers or 20 kilometers. Your job proximity from your rented place and far away. If you are claiming self-occupied house, there is a difference between self-occupied house and rented house. If you are claiming self-occupied house, then the interest benefit is limited to only 2 lakh rupees. If you are claiming on rent, then the rental value will be added into your income, but whole interest, you are paying 3 lakh, 4 lakh, 5 lakh interest, then the whole interest will be negated from your salary. Any more question? This is if the property is self-occupied, home loan interest benefit is only 2 lakh rupees. If it is rented out property, full home loan interest is available to set off from your salary. If husband and wife both are working, both are purchasing a property, joint self-occupied property, rupees 2 lakh for each joint holder. If husband and wife has purchased a property where they are paying an interest of 4 lakh rupees, each one of them can claim 2 lakh rupees interest benefit. Each one of them for a joint property. Joint rented out property, full home loan interest into all joint holders. For example, if you have purchased a property which is costing say 80 lakh rupees, out of which 60 lakh rupees is the loan amount and roughly 6 lakh rupees is the interest part. Out of that, you rent out of the same property, the rental income will be divided in both of you. If husband and wife both are earning and both paying the EMIs, interest will be adjusted, but before that rental income will be split between husband and wife. Rental income will add up and interest full 6 lakh rupees split up between two and negated. Joint property, either percentage ownership defined in same deed or on the basis of down payment percentage. Many a times we do not put a thought to define percentage ownership. It is in our own interest, based upon the tax slab the husband and wife are in, define your percentage ownership in the house. Reason, we have faced so many questions. Earlier me and my wife were working, I was in 30% tax slab, my wife was in 20% tax slab, but we split into 50-50, and now I am not able to save much and she is saving as per her 20% tax slab. So before deciding to purchase the house, please consider your own tax slab. Whoever is in higher tax slab, he or she should go for higher percentage ownership and make it mention in the sale deed. If you are purchasing a house from a developer, from a builder, for example, me and my wife, both are earning, both are going to purchase a property. Example purpose, I am in 30% tax slab, my wife is in 20% tax slab. Then I will opt for 70% ownership for me, 30% ownership for my wife. In that way, whatever interest is accrued, of that interest, 70% is assigned to me, 30% is assigned to my wife. She will claim her 30% part, I will claim my 70% part. Even for rental income, I will claim 70%, she will claim 30%. Is that clear? Any cross question?
Sir, is that percentage changeable every year?
No. This percentage is not changeable. Once you enter for a certain percentage, it will remain there lifelong.
Sir,
Yeah.
yeah, the own house is not rented. Own which house we have in group, it is not rented. But I am staying a rented house. Should I claim own?
I said na, in the previous slide.
That own house are not rented, the rent house, the rent is zero.
For example purpose, I am having not much idea of Chennai, so I am giving example from Bombay. If you are living in New Mumbai and your own house, your home loan house is in towards say Bhayandar, Virar, 30, 40, 50 kilometers away, you can claim that house, your own home loan house, for self-occupied property, and you can claim rental benefit, HRA benefit on your rented house in Navi Mumbai. Any more questions?
But then the own house is locked. You need to.
No, the own house.
Locked house can be claimed as self-occupied property. Own house, locked, can claim as self-occupied property. In case you have purchased a very big property, paying interest to the tune of 4, 5, 6 lakh rupees interest, and you want to claim full interest benefit, then you need to declare rental income from that house to get the benefit of full 4, 5, 6 lakh. Anyone?
What is the scenario where you lost the house but you have to show certain
Shall I get a
notional
claim
rent?
property loss also?
Yeah.
Property loss.
Property
So,
loss.
For example, that a rental I'm not getting no. So I'm making loss from the loan. That own house.
In this case, what you want to convey, that is called deemed rental income. Your house is not actually rented, but to gain from the interest you are paying to the tune of 4, 5, 6 lakh rupees, and being self-occupied property, your benefit is limited to 2 lakh rupees, then you need to declare the deemed rent. If your house was supposed to be rented out, how much rent you can earn, that deemed rent is to be added into your salary, but at the same time, whole interest 4, 5, 6 lakh rupees will be minus. Deemed rent income. That is the keyword.
So if you have locked your own property house
Yeah.
Then you don't have any loan, nothing. You have to show the name, right?
No.
You don't need.
No. Now this is the calculation. Calculation for rental income plus home loan. Earlier I was telling just in words, now it is in actual equation part, calculation part. Gross yearly rental income, that is A. It may be your actual rent or it may be deemed rent. This is your A. Whatever actual rent are you earning or you are declaring. If your house is locked, as the person said, if house is locked and you are declaring an imaginary rental income, deemed rent is equal to imaginary rental income, which your house may earn, that is A. Now government says whatever property tax to municipal authorities you are paying, that is available to deduction, that is B. For example, if your house is earning 10,000 rupees monthly rental income, so 1 lakh rupees, 1,20,000 is your gross yearly income here. Against that, if you are paying say 10,000 rupees property tax to Chennai municipality, for example, so that 10,000 is B and it is available for negative. Now net yearly rental income, which is C, is equal to A minus B. Whatever property tax you are paying to your local municipality, that is available to set off from your rental income. Okay. Now standard deduction at 30% of this C. What is standard deduction? If you are purchasing a property and giving it on rent, there are certain expenses which you may not have on every year basis or monthly basis, but after 3-4 years, say whitewashing, some major repair job, some major maintenance job. So government is offering you standard fixed 30% each year. You may not need to spend actual 30%, but still government is allowing you 30%. In our example, if this was 1,20,000, this was 10,000, so here it is 1,10,000. So 30% of 1,10,000 will become 33,000. So every year 33,000 standard deduction is available from the rental income. Okay. What this will happen? This will actually bring down your rental income for tax calculation purpose. You may not whitewash your house every year, but after 3-4 years you are going to whitewash, and at that year it may cost you about, but you cannot claim 10,000 rupees this year and 2 lakh rupees in that year. No. Government is allowing you standard deduction at the rate of 30%. Even for example, you are paying monthly society maintenance of say 1,000 or 2,000 rupees. That 1,000, 2,000 rupees is part of this itself. It is not separate. This society maintenance is also part of within this 30%. Please bear in mind, society maintenance you are paying on regular basis 1,000, 1,500, 2,000 rupees. It is part of this 30% standard deduction. This is towards the upkeep and maintenance of your house. No matter you are spending in small or spending in bulk, but benefit is limited to 30% of the C. Now interest paid on home loan is E. Whatever interest you are paying or you are paying in current financial year. Now income from house property F. That is your final taxable income from house property. That will be F, that is C. This one minus E plus E. D is standard deduction and E is your interest paid to bank. If F is a loss, obviously it will be a loss, because you are paying 4, 5, 6 lakh rupees interest and earning barely 1,20,000 rupees here. If your property is earning 10,000 rupees monthly income, then this will be a loss. Then this loss is available to set off from your salary income, which we call popularly as home loan tax benefit. Okay? Any more queries till this point? Any more?
So you have a house in some other city which is locked. Then you have to do 3 transfers.
Say, if you are in Chennai, your house is in Bangalore, your house is in Coimbatore, your house is in, say, Pune, your house is in Delhi. Even then, you have option. If it is in actual lock mode, you can declare it self-occupied. Or your parents or your brother or sister is living there.
So
You
have a
can,
house here that's self-occupied.
pardon?
You can only declare one house as self-occupied.
Yeah. If you are having 3, 4, 5 house, only one house you can claim self-occupied. Even though if it is blocked, you can claim only one house as self-occupied. Remaining all 2, 3, 4, 5, 6 house are to be declared as rented if you want to claim tax benefit on all the home loans. If you are running 2, 3, 4 home loans, we have pupils, but to it we have idea of people running 3, 4, 5 home loans. It is not, I am not joking. We have true examples in our group itself. We have people are running 3, 4, 5 loans, home loans, and they are happy getting that much and I am getting that much. So if you are having 3, 4, 5 houses, you have the option to choose one house as per your own convenience as self-occupied. Remaining house, you need to declare rental income if you want to claim home loan benefit. If you do not want to claim home loan benefit, anything else?
Ashal,
Yeah.
Rental income is a mandate, want to show,
If since for self-occupied house, the limit is 2 lakh. If in actual you are paying 4, 5, 6, 7 lakh rupees as interest, and you want to claim that interest as set off from your salary, then you need to declare your rental income. In actual, if you are earning, you should declare. There is no choice. But if you are not earning any rental income and house is in lock mode, even though you want to claim a higher benefit due to this, then you need to declare a deemed rental income and imaginary rental income. That is the point I want to make.
so what is the guideline for deemed rental? On what
What should be the amount?
is the deemed rental?
As per government income tax rules, the rent as per municipal authorities for that area.
So that will be usually lower than most of the cases. Yeah, what I'm asking is, if E component is not there, and I have a self-occupied house that is locked, so maybe my gross yearly deemed rental income might be lower compared to all the standard deductions.
No, if there is no E, there is no home loan,
Yeah,
there is no loan liability on a house,
Yeah.
and it is in actual lock mode,
yeah.
then you need not to do all this.
No, then I set off, that's what I was coming from.
No, if
The set off is only when you are running an interest, that's all.
yeah,
So otherwise the set off provision doesn't apply to a locked house where you are free of loan. that
if
you are-
there is, this is beneficial only if you are paying interest. If you are not paying interest, your home is free of loan. If there is no interest, then the question of set off does not arise. Your house is locked and you are happy with it.
No, notionally I am making a loss because of the standard.
You cannot make loss now. You
Right.
cannot make, if E is
On
not
the
there.
notional rent, that's what I'm saying. On the deemed rent, I'm not.
Notional, for your given example, or for your given question, if 60,000 rupees is notional rent, out of 60,000 rupees, say you gave 10,000 rupees here, so it is 50,000. Out of 50,000, 30% gone, so more 15% or 15,000
So only the
rupees.
interest will make
So
it,
still it is 35,000 positive.
Got it.
So you do not want to do that.
Right, right, got it.
Anything else?
So you cannot claim standard deduction and
Merely standard deduction on a locked property, if it is free from home loan, on a locked property, if it is free from home loan, there is no benefit to claim notional rent, deemed rent, imaginary rent, because even after a standard deduction, you are adding, you are positive, and you are paying income tax on that. What you people were asking, here it is. One property can be self-occupied if you are having multiple properties. Deemed rent for vacant properties. Actual rent for rented properties. What we discussed till this point. All properties on actual rent. It may be a situation that you are in Chennai living in a rented house and your one property is in Bangalore, one property is in Pune, one property is in Mumbai, one property is in Kolkata, and all are on rent. All properties on actual rent. You can declare rent. You can declare all the home loan as per the calculation I gave you, and accordingly you can set off all those negatives from your salary income. Different locations within India, as I gave the example. Even commercial properties, if you are investing in shops, if you are investing in malls and you are having say godowns, even those commercial properties are also considered for tax benefit within this home loan space. Government of India allows it. I am not recommending to do it. I am merely answering. Say one person asked me this thing, so I am telling this. I am not asking you to do it. Go and go purchase a shop or go and purchase a godown. No, I am not saying that. I am merely offering you an answer that can I purchase a commercial property and claim home loan benefit on it? Yes, it is possible as per income tax rules. Any more question till this point? Now, things are getting interesting. Till this point, I was saying home loan benefit, tax benefit, tax benefit. No tax saving on home loan if interest is paid to bank financial institution. If you are running a home loan, you are paying interest to ICI, HDFC, Citibank, SBI, Punjab National Bank, Indian Overseas Bank, whatever be your financial institution. If you are paying interest, this is my pocket and I am paying interest to bank. Am I really saving money? This is what Subra called innumeracy. What is happening? If you are not having a loan, if you are not having a home loan, what is happening? If you are in 20% tax slab, if there is no home loan, you are paying 20% tax, 80% money is in your pocket. Okay? If you are having a loan, you are paying 100 rupees to bank. 100 rupees from your pocket as interest is with bank. And now you are happy. What is happening? Say, look, I paid 100 rupees to bank. Now I am not going to pay 20 rupees to income tax. But those 20 rupees is not in your pocket. It is with bank. So in actual, it is merely an accounting jugglery. There is no tax saving at all. Money is not in your pocket. The thing, we are in the illusion that by purchasing a house on home loan, we are saving tax. Yes, you are saving tax, but you are not saving money. The money saved in the form of tax is gone from your pocket, keeping that 80 also with itself, 80 plus 20 making 100, gone to bank. 20 rupees is not in your pocket. People fail to realize it. Now can you realize? How many can say now, I am saving tax on home loan? Raise your hand. Who wants to say I am saving tax on home loan? This is what Subra has told so many times, innumeracy. This is innumeracy. Can you say now?
But this property is also appreciating, right?
That is different question altogether. I am focusing on the tax part.
Okay.
I am saving tax.
Yeah, like,
I have purchased the property on home loan. I am paying interest to bank and I am saving tax. That is the question. Am I saving tax? Yes, you are saving tax. What is happening? There are two windows. One is named income tax, one is named bank. You are not paying 20 rupees to income tax. You are paying 100 rupees to bank and happy. Say, look, I have saved 20 rupees. I have saved 20 rupees in tax. Money is not in your pocket. Real tax saving on home loan if interest is paid to someone within family. If your mother is retired, if your father is retired, or they are not earning at all, and if they are having a corpus and you use that corpus to take as home loan from them and now paying interest to them, your father, your mother, of course if you may prefer your father-in-law, your mother-in-law, then what is happening? This is the money. Here it is. Now say, did you save tax or not?
Can he claim that interest paid us within the family every day? He cannot claim it.
Yes.
He can claim.
In case of home loan, there are two tax benefits. One is on principal part, one is on interest part. Principal part deals with section 80C when you are repaying your basic home loan. That is available only and only with financial institutions or your employer. It is not available when you are taking loan from private entities. It is not available. Principal repayment under section 80C is available only with financial institutions or your employer. But the interest part, when you are taking loan either from financial institution or from your employer or from private entities, then the interest benefit is available equal, no matter from where you are taking. You will take from your bank, you will take from your employer, you will take from your father, you will take even from me. If I am having money and we are on equal terms and we can decide a rate of interest, I can give you the money and you will pay the interest to me, then you can claim the same interest as tax benefit in your calculation of income tax. Now, how to do it? Prepare loan deed for family home loan. If you are taking home loan from your father, from your mother, father-in-law, mother-in-law, then you need to prepare home loan deed. Just like when you are taking a loan from ICI, HDFC, SBI, any financial institution, you run a long home loan application, then sign on 30, 40, 50, 60 pages, 100 plus signatures. Similarly, you need to enter in a home loan deed. Loan deed should be on 100 rupees stamp paper. Then preference for non-earning members like mother, father, mother-in-law, father-in-law. Non-earning member, preference should be given. If your brother who is not earning, you will take loan from him also, but he should have money to loan you. If it is your sister, she should have money. If your mother, your father, your father-in-law, your mother-in-law. Basic concept is money should not go outside. Money should come from one pocket to another pocket. That is the whole concept of this. When you are doing this, you are actually saving the tax amount from going outside. In bank's case, in employer's case, money is not in your pocket when you are saving tax. But in this case, the money you give to your father as interest, it is within family. Your father can return that amount to you. For example, if your father is retired now and he is having a corpus of 20 lakh rupees and he is earning say 9%. Instead of earning 9%, you may offer 12%. Say, father, give me the 20 lakh rupees amount and I will give you 12%. So your father is now earning more of the same 20 lakh corpus. And you are happy that 12% interest is ultimately within family. You can claim later on, you will take back 3% from your father later on. But now tax benefit is there still.
Is there a cap on the rate of interest? Because to get more benefit, I might offer even 20% to my father because it's still within the.
Make it 100%. It should be a reasonable. It should be reasonable. 12, 13, 14, 15 is okay, but 50% or 70% is not allowed. Yes, please.
Yeah, I already have a home loan. That's
Okay.
for me.
Okay.
Actually, I was planning to do the same thing.
Okay.
My father got a corpus, so I was planning on getting some amount from him and settling the principal on the current running loan. So, if I were to factor in this information, am I allowed to do it?
Yes.
So,
For example, your current home loan provider is offering you 11% and SBI is offering you 9.7%. Will you go for 9.7% or not? Balance transfer, which is popularly called as balance transfer. Here in this case, balance transfer is possible. It is allowed as per Government of India, as per income tax rules, it is allowed. You are taking fresh home loan from your father, mother, father-in-law, mother-in-law to pay back your old loan. Only difference is a little bit play around the rules. You are, instead of going for lower rate of interest, you are going for higher rate of interest. Your current home loan interest rate is 10%, but you are ready to pay 12-13% to your father. You want to help your father. You want to increase his income. You want to help your mother. You want to increase her income. Indirectly, you are juggling the money within the family to save interest, to save income tax, and keeping the money with yourself. Yes, please.
Let's say if my father is a non-earning person and I'm having corpus and I'm giving money to him and taking back from him as again a loan. Is it possible to do that?
Yeah.